All right, guys. Gonna try my best to make a little quick analysis here on what I plan on doing for the whole week, and what are some major events, and what are some key things to actually look for based on all the events that are coming out for this week. So all I'm gonna highlight is just the red news here, and I'm gonna show you guys that on the my FX economic calendar here. The most important thing for this week is the Jackson Hole event. And it's a 2-day event. Those of you that do not know what the Jackson Hole event does, it's basically an annual event for all the policymakers, central bankers, all the Federal Reserve members. And the most important thing out of the Jackson Hole event is Powell's speech. He is the main event speaker. And so he's got to cover a lot about policies, the monetary policies, the economic data, and where he projects for the upcoming, pretty much what's the turnaround for the inflation and everything for the U.S. economy. So it starts on Thursday, you can see here, and ends on Friday at they say it ends at Friday at 7 p.m., but the markets are closed at 4 p.m. But the 2-day event is gonna keep going. So regardless, even if the markets close, the event is still going on. So whatever his last remarks are, this is gonna be a significant impact. Also on Wednesday, we have the FOMC minutes as well. So Wednesday will be the kickoff, and I apologize. Jackson Hole starts on Wednesday night. So I saw Thursday, that's why I was going off of Thursday. But it is a 2-day event, so from 7 p.m. all the way till 7 p.m. Friday. So 7 p.m. Wednesday, all the way till 7 p.m. Friday. So the Jackson Hole and the FOMC minutes is the only key data that I'd be looking for, because it's going to steer the markets, especially wherever the U.S. dollar is going. Where I project where the U.S. dollar is going, even though to me this is just a retracement candle on the weekly, I expect a new weekly candle to keep pushing forward to try and push for 98, or at least hit somewhere here at this 97.5 area. So from there to see where it's going to go, and if it's going to close above, then basically we are looking for a long-term buy until, like I said, I see a long-term buy until probably till the end of the year. The way they shot the dollar down, and then I expect right now the expectation is to keep buying the dollar until next year's January. So that's a full year for where the dollar is being projected and where it's headed. If that is the case of the dollar being projected long-term buy for the next 4 months, and we have to look at gold as coming down pretty hard. And it has been going down. Look at this, nothing but bearish candles within the past few weeks here. And the only way, like I said, the only way that I would buy it is if it creates, this candle structure here to signify that's going to reverse. So that's a candlestick pattern to look for. Here, you can see that it shot right back and retraced, closed here 1184. But if we were to draw support, there is no support here anyways. So even if this candle acts as support and retraces back to 1200, it needs to keep going. And the only way I would buy long term is if it breaks 1220. So the first couple of days will probably be nothing but either consolidation or a set of retracements for the whole New York sessions or London sessions, even Tokyo. Let's see here, New Zealand. This is their retracement bull candle here. And then I'm expecting the new weekly candle to drive down even further and maybe target 64 cents. And like I said, long term, probably target the 62 cents here. Same thing with Australia. To target this double bottom structure here at 70, pretty much 71.5, and then target this low price here at 68.5. Let's see here. I don't care about that one. USD JPY, like I said, USD JPY hasn't really decided to make any sort of move here, and you can see this doji candle here, how it closed like this. Now, what I expect is to keep going down. Target 1085 off this wick here, and we don't have any other support until we come down to the very bottom here at 104. I do not call these support candles because there is no support here. So you can see how much they dragged it back down. Right at 111.5, they dragged it back all the way down to 110.46. So dropped 110 pips from there. Let's see. USD CAD going down, but realistically, I am still long on this one. And if you were, like I said, you were to really draw the trend line, hasn't broken that trend line. I mean, you can put it out there if you want, but if you listen to drawing the trend line, you can see it hasn't broken it. And I'm looking for it to bounce back from 130 and target 133 again. Let's see what else. USD Swiss franc hasn't made its decision to go down as a strong sell and hasn't made its decision to be a strong buy either. So USD Swiss franc will probably end up being a pretty strong consolidation phase around under $1. It needs to peak above $1 for it to be a strong push for a new higher price. If that's not the case, then it's going to sit around 99. If it breaks below 99, closes below 99 cents, and I'd be looking for it to target all the way back down here at 95. Because like I said, this is not support at all. And then the target 92.5. So that's it. That's those two price targets I'm looking for. USD Turkey. I mean, those that caught this made a lot of money. This is a really bullish run ever since when? 2009? Holy crap. So since 2009 it's been going up. So been peaking really high, hit all above $7. And that was the price they shot up to. They shot it all the way back down at $6. It is still on a strong uptrend. I mean, Turkey's still doing their it's like a political turmoil, and also they're going against what US is doing right now. So we could see a face-off again, maybe another spike going down, and then another spike going up. What I mean is that it's just such a very volatile, exotic pair right now, and you can make a lot of money if you're just choosing to scalp this thing. Other than that, I can talk about the euro and pound. No, I didn't. Okay, so for the euro USD here, look, I'm still looking for it to target the 112 price, and then target this gap here, 107, 109. Because we still have 4 months of the year, and the dollar's been pushing up since April. So we probably might not see a sell for the dollar until next year, if that's the case, because they sold the dollar since January 2017 when President Trump got inaugurated, and then they sent it all the way down to the end of December of 2017, and then February picked up a little bit, but then April started that kickoff. So it's very important to understand that whatever goes down for that long is going to come back very similar to the same structure and the same price in a calendar year. And for those that actually do follow the patterns, there is a pattern in trading. I mean, everything has a pattern. Lottery systems, casinos, the odds of winning, the odds of losing. I mean, you can look at all that stuff. I mean, if you think it is bogus, but to me, it's not bogus. There's a pattern in everything. There's a pattern in the system. There's a pattern in every single thing that we do, to be honest. But yeah, for the like I said, for euro, I'm looking for it to attempt to break 112 here, and then come down to 109. The pound, very, very tricky right here, but it's already been down this much. So next target would be 126, and then the 124, and then pretty much 122. And if it does break lower, then I mean it probably end up breaking 119, which I would be really shocked. But can't be surprised about where things are going. If we were to base everything off the monthly, it is still, the pound is still on a massive downtrend. I mean, if we look at the monthly on the euro is still on the downtrend. Didn't matter if it came back from 106 back to 125. Don't matter about that. Still, it's. I mean, look how strong this monthly candle is engulfing. And if you look at the monthly structure, there is no other support for this. This is not support. That's not support. This is not support either until you come here and here for the euro at 105, 106. So by looking long term, it probably ended up being a long term sell to test the lowest price of last year. You have to be prepared for that. Those of you that look at the 4-hour daily, you're going to have to learn how to look at the weekly and the monthly, because those structures are a lot more important, especially looking at long-term setups. And you got to remember that the higher the time frame, the stronger the support in the daily is. I mean, the stronger the support and the resistance are. So you have to remember that if the monthly candle is engulfing the 4-hour, the daily, and the weekly candlestick structure, you have to be prepared that the next monthly candle is going to engulf even further. So you have to be fully adaptable to the candlestick structures for the higher time frame when you are anticipating the direction of where it's going to go for the next month. I always try to anticipate at least 2-3 weeks ahead, so I know where things are going to go, and then I try and draw out for the next year and what happened last year and what might happen for the upcoming 2 years. And so you have to be prepared for that at all times. And like I said, FOMC minutes and Jackson Hole event would be the key events, because it will drive the markets. And then, like I said, everything is still back to trade wars. We will still have unexpected events from Brexit deals, the European Union, the ECB, Turkey, what else? U.S. and China, maybe a possible Japan and North Korea might get involved as well. Other than that, I think that's pretty much it. And then, yeah, pay attention to oil prices for this month, because it will affect for the upcoming fall season. Those that are trading oil, because Canada is one of the main oil exporters. So other than that, that's pretty much it for you guys. This is mid Sunday. The market's opening to 1:30 here. So yeah, the market's gonna open here in about 2.5 hours. Don't get too excited yet. Wait till, like I said, Wednesday will be your kickoff day, like a Super Bowl. And that's pretty much it.